Good afternoon. This is Dividend Coffee, and this is a continuation of my videos. I'm a old age pensioner in my 60s, and the challenge that I set myself was: could I buy a year's worth of coffees via Witherspoons, and their coffees around about £1.50 mark, and they fluctuate up and down during the year. But so I thought that if I could reach £150 of realised profit before 2026, by the end of 2025, then that would be a convincing argument to say that I could make some realised profits on the stock market at 60 plus years of age. So that was my goal when I started. I started in, I think it was something like around about July 2024. So that's why I've extended it to the £150 worth of coffees, because I've included a little bit of 2024 that I did as well. So that was the general idea. So yeah, I also do videos that are like same day update videos, and those videos actually, unlike this video that will be part of a collection of Dividend Coffee videos, I do same day update videos. So on the particular day that something interesting has happened in the stock market, I then upload those videos on that day. And really, to get those videos, you really have to subscribe, really, because these videos that go up, they're usually around, this video will go up and it'll be around about 2 weeks, maybe 3 weeks after I've actually created the video. It'll actually go up online, and that's because I've got a bit of a backlog of videos, to be honest. And but with the same day videos, what I really try my best to do is put them up on the same day that I've actually recorded them. And they haven't got, like, on these videos, they've got like a coffee cup and everything that you see at the start of the video and things like that, and then you press on it and you see you see and hear this me having a conversation, basically conversation with myself. I tend to think of it as just me talking about what's happened on that day, and it's a little bit like a podcast to oneself. Instead of having somebody else that you're having a discussion with, I kind of tend to, like in this video, we'll kind of just discuss the shares and what's happened so far. So it's this video's, I'm actually doing this on the 28th of February 2025. So this probably may go out in March now, and but what it does give, when I sort of do these types of videos, I tend to sort of like have a line of topic that I'm trying to discuss, as opposed to my other videos where my same day videos, same day update videos, I tend to just explain what I actually did that day in the stock market. And today Here we go. Just in case anybody hasn't seen my videos before, I'm like what you'd call uh, a novice investor as an old age pensioner. So what I'm doing is I started off with 212 in 2024, and I started using that app, and I think I had like something about a £12 or something, or a £15 starting share or part share. And what I've done then is built from there. So what I've done is actually just basically every week I'm an old age pensioner, so I don't really want to put an awful lot into the stock market. Most people, when they're old age pensioners, usually just take money out of the stock market if they have it. So my idea is basically I put in a very, very small amount each month, each week actually. And so it really just depends on my mood or what I'm sort of like interested in. If I want to buy more stock, or if I haven't had enough money in the account to buy certain stock that I want to buy, then I'll probably put a little bit more in. Otherwise, I'll just trickle in maybe £10-20 a week into it. And so as you can see there, the total value that I have invested in the stock market at the moment is £1,582.94. So this is really, really a small amount of money compared to a lot of other investors. And really, when I started off, it was like I was making pennies, not pounds. But I think this is part of the topic that I'd like to discuss. I've only really got £1,500 around about invested, as you can see in the stock market. And before I was making basically pennies when I was buying stock and then selling out of the stock. But now that's slightly starting to change. And it's quite an encouraging change, actually, because I'm now starting to make, like where if I bought and sold stock before, I'd make 20p or maybe 5p, 10p. Now I'm getting to the point where not every single time, but a lot of the time I'm actually starting to make pounds, and pounds kind of build up quite quickly. So it's like today, for instance, I think I've made about 3, 4, maybe £5 just in one day. And we'll go and have a look at that now. So if I go to history and go to orders, it says today there. And up until now, my realized profit so far to date is, and I'm surprised that I've actually made this money. And this is like just what money you've actually made. I've made £136.89 so far to date, and the only real difference in this and the money that you see when we go back to here and we look at total return is I've got £73.28. And what you'll find is that the stock that I've got invested, anything that's in a negative, is actually taken away from that figure as well. So I think that's what I think is going on anyway. So back at the orders. So my realized profit today is basically the profit that I've made from the difference between buying and selling shares. I think also you've got to take into consideration things like stamp duty with things like this. So So there is maybe a bit of variance there because of things like that. And also, the other stream of income I get whilst I'm doing this is dividends. And to date, I just had one in today, and that was Greencoat UK Wind, and that was £2.90. And as you can see from starting, I've made £15.06 just in dividends alone. And there are a lot of people that are just dividend investors. In other words, they don't buy or sell shares like I do. They just put their money into the stock market, into different dividend type shares, and just wait for the dividends to build up. My approach is slightly different. I don't actually do that. What I tend to do is when dividends are available, then I might consider buying into them. So let me just show you what I mean by that. I keep a list of shares that I'm interested in within the stock market, and they're all here. You can look through them. And what I do is I put the yield, what the current yield is. That does fluctuate sometimes, so sometimes these yields can be wrong, but most of the time they're pretty well spot on. I got another column with lows and suggested buying points, and for different stocks. So it's something that I tend to use when I'm thinking about. It's just through past experience what stocks have been and where they kind of hover at usually. So I kind of take all of that analysis in, and what I do is highlight. It's like Unilever on the 27th of the 2nd, 2025, went ex-dividend. So did is Diversified Energy, I think it is. That went ex-dividend as well. And there's the yields for them. So Unilever is 3.75 there, and Diversified Energy is 8.58. And I'll show you what I do now. So when they go over that date, it's now the 28th. What I'll do now is I'll just go down there and I'll just turn them back to black. So that's what I do, and then I'll look through these for when the next month comes, and I'll start to go through them all. Like Rio Tinto's gonna go ex-dividend on the 6th of the 3rd, 2025. So I'll start doing that. And what I tend to do then is I look out for them shares, and if they're at a good price at the time, then I'll actually buy into those shares, so that I not only have the advantage of buying into those shares and hopefully making a profit, but I like to buy into the shares and have some dividends from them as well. Ex-dividend dates mean that they go ex-dividend on that particular date. It's not the day you get paid on, it's the date that it goes ex-dividend. If you own them shares on that particular date, if I owned Unilever shares on the 27th of the 2nd, 2025, I would then get a dividend, and that might be 1 month later, but I will eventually get the dividend. You don't get the dividend the same day. You get it usually 2 weeks, 3 weeks, maybe a month, sometimes 2 months ahead. But eventually you will get the dividend. It'll come up and it'll show up on your account. So that's my approach, and that's the approach that I take. So I'm trying to. So my approach is that I'm trying to actually get realized profit here. So that's one stream. I can look at them as streams. Dividends is another stream, so I'm trying to build up my dividends there. Sometimes it's just not possible, because sometimes when it gets close to dividends, people buy into those shares, and then it's very difficult to buy in yourself, because you know that the day after the day it goes ex-dividend, people will sell out of it really quickly in the morning, and then that will take the price down very, very fast, and it's nearly impossible to catch that price high up. So it's a bit of a dilemma. I've got some strategies that I formulated to try to combat that, but that's just the way it is, and I've done so pretty good so far. But if I find that the share price is just too high for what I think that the value of that shares are worth at the time, even though it's going to go ex-dividend, I won't actually buy into those shares, because you tend to find that the decrease in price of the shares afterwards is more than actually the dividend that you get, or in my case it is anyway. And then interest, I switch this on and off actually, but total interest to date is £4.62. If you switch it on, it's done via qualifying shares, and basically if Trading 212 went bankrupt, then you probably wouldn't get your money back. That's my understanding of it. I may be completely wrong, but that's how I understand it. So it's a little bit of a risk factor. You can turn it on and get whatever the interest rate is at the time, or you can just leave it off. Sometimes I put it on, and sometimes I don't. And it just depends on how much they're trying to take for qualifying. They got like these qualifying shares that they use or something, and can't think of the name of them now, but you can actually just switch it off if you want. It's completely up to you. But at the moment I got £4.62 and in that, and basically very quickly go through just to show what I've been doing today. I'm not going to go into each one, but I will just for one or two. So here today I made £1.29. Again, now I'm actually over the pound mark, which is really good. And again, I sold out there and made £1.09. So that's £2 already. And then I sold again here and made £1.19. So that's £3 something. I think about 40 or 50 pence, something like that altogether. So it starts to build up after a while. So I kept on doing that through the when sold out to them, and what I'll do is take that money, and when the price goes down, I'll probably buy back into those shares. Vanguard was interesting. I've had Vanguard for a while, and the reason why I bought into Vanguard, I've got 0.5 of a share here, and I think I got one share altogether, is because of the price. The price is 88.265, and it normally hovers around about the 90 to 93 mark. So that was the reason why I was interested in, and I did the same here. I bought in at 88.675. And again, when it's down at that price, you don't see it down that price that often. So it's usually hovering about the 91, 92, and recently the 93 mark. So I don't know what's happened in the US for it to drop off that sharply today, but it has anyway. So I bought into it. I thought I haven't put a lot of money in there, as you can see. I thought I'd one share completely in there, but I haven't. I got 0.61 of a share in there. So okay, I bought in for don't know why that's £54.09, I guess. Yeah, so that's what I paid for it. Because when you sell them, they have a plus on them. Okay, that makes sense. Diageo, I really bought this last minute and I just made a little profit on it. A couple of pence really, but it was because it'd fallen down quite low, so I just bought in and out of it. And I think it might fall back as well, so that's why I didn't stay into Diageo for the time being. So again, did this very much the same with SSE. They were down, and then I bought in, and I made a 20 pence profit on them, and I think I paid 4 pence or 3 pence stamp duty on it, so I probably made about 17 or 18 pence, 17 pence on it probably. And but all these little things really do add up, and they do help. And I only held that for a couple of hours, so it made me enough money to want to get out of there. It was going up near where it probably would go start to come back down, so I decided to get out of there rather fast. And I'm always buying when I think something's at a good price. I've bought into Greggs there, and bought some more Vanguard there, and bought some more shares in Greggs, bought some in JD there, and Halfords. I bought some shares in Halfords, and obviously I sold back out of them up here at 17.63, and so was buying a lot of Greggs, and say made a fair profit on that, and sold some Greggs as well down here. And so as you can see, looking through there, I've been quite busy today. Taylor Wimpey, I bought some shares in, and some that I bought in I sold higher up. So yeah, it's been a relatively user intense day, so buying and selling shares quite a bit through the day today, and I've thoroughly enjoyed it. It's been really great. As I am an old age pensioner, 60 plus, and I do have a bus pass, which is always good, and it's nice that I can just what I've done today. I've gone out, had something to eat, and then I've popped down to the seafront, and I'm now actually sitting here in the car, and that's the reason why I wanted to do all of this using my phone. I've had one or two responses saying, well, you could provide us with a bit more data, etc. But then I won't have the flexibility if I've got to have a computer with me and set all that up, or stay in the house with a computer. At my age, I don't really want to do that. So I'm out now, sitting overlooking the sea, and it's quite nice as well. And it's just getting to that time of night where some of the lights are going on, etc. And it's very nice and very calm, and it's just a lovely evening. So so that's why I got my phone out now, and I've started to do this, and I think that's part of the enjoyment of doing all of this, with buying and selling shares, and to encourage old age pensioners. You know, it's never too late to start, and I also years and years ago I bought shares when I was very young as well, and so it's not the first time. This isn't the first time I've absolutely held shares. I've bought shares before, but it's quite a while since I've dabbled in the stock market. So I'm now dabbling a bit in my 60s, and yeah, I think that as long as you've got a fairly good analytical brain, and I enjoy playing chess. I think I've said before, and within reason, most people, um, you can just take it as a hobby and just enjoy it as a hobby. And I don't put uh, a lot of my um, a lot of money into the stock market. It's I would say something like less than half of 1%, if that. So I just put a little tiny bit in the stock market, and it's normally just as I said, I just put in maybe £10-20 a week. Sometimes nothing. Some weeks I just won't put in anything at all. So it's just whether I feel. It's usually down to the fact that how many shares I'm buying. If I'd like to buy a little bit more shares, but the realization as well, the more shares that the more money you have in the stock market, the more variety of shares you can have. So you can have like 7 or 8 different shares, and the more money you can have for each share means that the more you're going to make when those shares go up in price. And shares go down, and my strategy is a very, very simple strategy, and I kind of stay with this strategy because I've got such a little amount in the stock market. It really doesn't matter if I buy into some shares, and if they went plummeting down for an awful, well, let's have a look. There's one or two that I've got that's doing it right now. So I've got B&M European Value, and at the moment that's £15 and 58 pence down. So and if you look at where my line is to buy into it, it's quite a difference. I'm up 318 and it's down 277. So I'm completely happy. I am £15 58 down, and if I look at the chart overall, then this has been going down for an awful long time, and I think this is going to eventually come back up. Either that or they're going to go bankrupt, which I don't think they will. And so I've got £105 and 53 pence in there. So with my strategy, I tend to limit. It's like I might buy a few more shares in there if there's a lot, if the price is really down low. But I do limit at if shares have been constantly going down, I really do start to limit how many more I buy of them. So in effect, I probably won't buy hardly any of these anymore. One of the other reasons why is because although they've got a nice dividend yield of 10.77, I don't think they're one of the stocks that give you dividends 4 times a year, and those are the ones personally I prefer when it comes to giving you dividends. It just feels nice if you can work out that you have stocks that you can get a dividend of at least one stock every single month. That's what I'm planning to do in the future. So if I can do that and have a stock every month that gives a dividend, I think that'd be quite nice. And so that's my plan of action there, and to get stocks that give you a dividend every month. So this isn't one of them, so eventually I will sell out of it, and I think it will eventually go back up. So it's come down such a long way. Logic would say this is going to eventually go back up, but I think I'm in that position where I can have £105 in there for 10 years and it wouldn't bother me at all, and I wouldn't even think about it. It's just like, okay, it's in there. And at the end of the day, if I was really, say for some unknown reason, I really needed the money, well, I'm going to lose £15.58. Well, overall, I've made 100 and I think it's £36 profit to date. So if I'm losing £15 from there, I'm still going to be so much up. That certainly wouldn't concern me at all. So, I do have strategies in place that if I were to, if I had to buy out of this, then I would still be ahead overall. And I think that if you got that idea and you plan your and you analyze information and plan things and approach things from that point of view, then I think you can't really go too far wrong. I don't think so. Things that I keep away from are these where you buy shares and they're 3x'd or something and all that sort of stuff. And somebody's trying to make money very, very fast. And when you've got good times, you can make a lot of money with it. When there's bad times, you can lose a lot of money with it. So I've no interest in that. I like to just plod along and just slowly build up my portfolio, and that's what I intend to do for the future. So I'm actually going to go for a walk now. I've enjoyed having a natter, a podcast to myself, talking about my shares, and so I think I'm going to leave it just about there. And if I go back to there, you can see what I've currently got open at the moment. I've got Vanguard, which is up 30p, and I've got 1.5 shares in there then. Yeah, 1.5 shares I got. I didn't realise it's so many. I've got 1.5 shares in Vanguard. That's how many shares, and it's worth £133.07. And as you can see, the drop-off's been quite dramatic there. But they normally hover around about the 92 recently, and my understanding of the S&P 500 is that they just slowly go up over time. So, and if there isn't, if it was down for a year or two, and I was £133 down, it's not really a concern of mine, really. It's I just leave it in there and not be too bothered. But I'm up by 30p now, but I could have been down by £2 or £3. So you could consider how much you're down by overall, and have you made more profit than what you're down by. As long as you have, I can't see any real concerns there. Taylor Wimpey, they've been I bought into these a little bit. I'm now at £113, and they're just under my sell limit. I could sell when they go above there, and these have been hovering up and just over and back down this price now most of today, actually. So not really concerned. I think these are going to go back up in the future, and I have no issues at all with them. JD Witherspoon's, sorry. Currently down with these. I've bought into these because I'm trying to make a quick turnaround profit on them. They're down £1.06, but I do have 30.2 shares in them, which gives you £179.39. And I believe in the next couple of days, on next week, by the end of the week, they'll turn around and they'll be back up and I've pre-sold out of them by then. So and then I'll probably buy back into them eventually, because I just like the way, if you look at them, how they hover, and they're slowly going down, so they're slowly decreasing in price, but also they've got that nice flipping action. They go up and down, up and down, up and down, and that's what I like, because I like to buy in when they're at the top and sell it when they're at the bottom. Buy in when at the bottom and sell when they're at the top. So this kind of chart, lots of people don't like it, but I actually like this type of chart, and I can see that it's slowly going down. So when I go to buy in next, I'll take my buy-in price and reduce that down. But there's a constant. If you take a line from the top to the bottom, there's a constant percentage that it's going down. So you can kind of calculate that and figure out where you want to buy back into. So I like this sort of graph myself. I think that's just my personally. Dividend Energy, they have gone down significantly. What happened was that I bought into them. I've got now 10 shares in them. I bought in them for the dividends, and their dividend is 12.47 yield, which is really high, and they pay out a nice dividend, and I bought into them, and for that reason. So I was below my line when it went ex-dividend, which is a bit of a pain, so I couldn't sell out to them. So I've just kept in them, and they have gone down, and I'm at the moment £9.59 down on them. But again, not really that concerned, because these are the type of shares that do fluctuate throughout the year quite a lot. So yeah, I'm not really terribly bothered. And if you look at the way that graph is, it's slightly going up as well. So, again, I think £105.70 in there is reasonable. And I think you can probably see there's a bit of a pattern going on here, where I'm sort of equaling out a similar, not completely the same, but a similar amount of money on all of my shares, when so that if one or two stay low for a long period of time, I'm still making money on other shares whilst I'm waiting for them to come back up. So that's again part of my overall strategy. And so the other thing I didn't mention about Dividend Energy is they pay out 4 times a year. So that's one of the reasons why I like them. And if you look at their financials, I think they're pretty good, actually. So I kind of like Dividend Energy. Somebody did point out to me that there's a equity to debt ratio that's slightly high on them, but they are in the oil sector, so they do buy a lot of plant and machinery, I would guess. So, but there we go. I certainly wouldn't advise anybody to follow any of my strategies. They're just things that I've developed myself, and I certainly wouldn't give anybody any financial advice, and I think anybody would be wise never to take any financial advice from me anyway. So yeah, it's just the way I think about the stock market. And Greencoat UK Wind, they seem to be out of favour at the moment, a lot of people have said, and again they're down. These pay out again 4 times a year. I'm happy to hold them, happy that they're down by £10.52. I'm not too bothered about it. I think they'll eventually come back up, and but I think they are starting to bottom out now around about where they are, so I don't think they're going to go down too much further. I could be wrong. You never know, but I think I'll be surprised if they go under £1 a share. Very surprised indeed. But you actually you never know. And so yeah, that's it. And I think my phone is about to die now as well, electrically wise. So I'm gonna switch it off now. I think that's probably the best approach to take. And anyway, anybody who would like to subscribe to me, please do so. And if you'd like to ring the bell, apparently that is really good because it gets you noticed with the YouTube algorithm. Feel free, if you want to pass this around to any of your friends, if you think the information data in it would be helpful to anybody. Again, I certainly wouldn't take any financial advice or follow what I do. I think that would be a very bad idea, to be honest. And I think, it's just the way I do things. So I wouldn't expect anybody to follow it. They'd probably end up doing very badly if they did. But it seems to be working for me anyway. If and that's all I mind. So yeah. So if you'd like to subscribe, by subscribing, again, what I said at the beginning, you get the ones that I do on the daily update. So that if something's happened that day that's interesting, I'll actually discuss it very quickly. And it's not like these go on for quite a while. Daily update ones are really fast, and within 10 minutes, I'm probably 15 minutes usually I'm over with discussing it, and then I send it out that same day. There's no coffee cup logo. You can tell it's a daily update because there's no coffee cup logo on there. It's just a raw video, and I just send it straight out. This is a raw video in the sense that I don't really edit it, and yeah. So, but I do put a coffee cup on the front of it, so it looks nice on YouTube. So, and it gives a brief outline of what I'm going to be discussing that particular week. So I think I've got some till about March now, so this is probably going to come out sometime in March. And so anyway, thank you very much. If anybody who's actually taken the time to listen to this podcast to myself. So thank you very much for now, and bye for now.